one of the biggest things that's happened is unemployment goes way up. I don't think that's personally necessary. I think if companies, instead of laying people off, simply said, look, we're cutting salaries in half, you can all stay on. It's the same result, and people would be happier that way. But for some reason, the human mind doesn't work that way. They think the only chance is layoffs. So unemployment goes up, and it's going to be very difficult on a lot of people who can't hold on to a job. So the important thing is to make sure you have some way of making a good living. Make sure you're out of debt, because if you owe a big mortgage, for example, and you can't make payments for 6 months in a row, they'll come take your house away, and you're homeless. So you want to be out of debt, if at all possible. You want to have some source of income that will do well in a depression. And, you know, some businesses expand during depressions because they're giving people services they need. And I even listed one or two, you know, like repo services and bankruptcy services. And actually, those kind of firms are hiring like crazy right now. So you do have that kind of thing. But yes, you know, a depression is a period that's difficult for many, many people. But it's not the apocalypse. It's not the end of the world. It's just a tough period that's going to last, you know, 5 to 7 years, and then we'll come out the other side.
Well, speaking of end of the world, and I wanted to bring this up because I see often where your views are characterized as, oh, Bob Prechter, of course, he's a perma-bear. In fact, when I told somebody in the office that that's not on the financial side, but a person in the office said, hey, Bob Prechter's going to come by and sit down with us for an interview. He's like, well, he's a perma-bear, right? Hasn't he been bearish on the market forever? Talk a little bit about how that gets characterized that way. I mean, I think I have a feeling, and you can tell me if you think this is correct, that part of it is due to you focus on things, on the one hand, grand super cycle, long-term events. And so when you're talking about a grand super cycle period and a transition there, when you publish a book, say in 1994, I believe is when at the 95 at the crest of the tidal wave. Now, when we step back from 15 years later, then that's actually quite timely. But of course, people with short-sighted, short attention spans, short time frames might say 1995. Well, that was obviously 5 years before the first downturn from the dot-com bubble.
Yeah.
So,
and they're right, but I like your explanation better because I think that's the one that matters. Markets are a fractal, and what I was trying to say is, folks, we are coming to the end of an uptrend that's lasted longer than 200 years. Now, if the uptrend had lasted 1 year, and you were a week or two early, people wouldn't pay attention. Right. But if you're 5 years early in a 200-year trend, it's about the same, but it looks like a long time to the average person. So the size of what's going on is so important. And if you read our first book in 1978, I actually drew what the Dow should look like and go up and go above the trend line that connects the tops of 1937, 1966, stay up there for a little bit, and then retrace the whole thing. It's taken a long time, but that's exactly what's going on. So I think we've got a great handle on what's happening, but the gods of finance are not going to let you be completely right on everything. It doesn't happen. The other thing I think is very important is that people are in an optimistic frame of mind at a historical extreme. It's lasted since 1998 at least. There was a little sort of respite from that in the fourth quarter of last year, perhaps, and early in this year. But people are coming at this opinion from that frame of mind. Right. And when I first, they used to call me a perma-bull. Because I said, look, there's a huge bull market, it's all developing, and then in the 70s, they go crazy. What's your problem? Can't you see the obvious right in front of your face? I said, no, I'm looking at tomorrow, not right now. So yeah, I was a perma-bull, now I'm a perma-bear, but I'm really looking forward to the time when I'm back to being a perma-bull, and I say, look, we're going to go for 20 years.
Talking about social mood for a moment and the way people are approaching the market, it's interesting that one of the questions that I get asked when I write about deflation, almost inevitably the first question someone will have, trying to be smart, and rightfully so, is, okay, how do I profit from this? Which I think is probably the wrong question, because it's not how do you profit from it, it's how do you survive it. Is that?
No, you can profit from it.
Okay, well, how do we do that?
Tremendously. In fact, this is one of the greatest profit-making opportunities you will ever have in your whole life. The money you could make in that collapse from October 07 to March 09 was absolutely tremendous. It was fast, 57% down in just 17 months. Right. Bull markets are slow. I mean, you go to sleep trying to make money in a bull market. You will make a lot, no question about it. But if you're leveraged on the downside in the bear market and you use rallies to sell, it's such a great opportunity. Now, in the third week of February, we said, look, we're compressed, we're in the fifth wave, we just broke to new lows, we want to cover all our shorts, we're going to have a big rally. Now I think it's ending, so I think it's another terrific opportunity on the short side. But I rarely say that publicly because most people, can't really handle speculations and shouldn't. So the average person should just keep their money as safe as possible, treasury bills in a treasury money market fund, treasury only money market fund, and that's it. Because if they try to speculate, they'll get scared out of the position or do something wrong. But if you're really a professional, if you're running a hedge fund, you probably think I'm too conservative.
Right.
If you're a retiree, you think I'm too aggressive. But I do say that if you are that kind of person who wants to profit from it, there's no better time than a bear market. They're fast, they're violent, they're great.
Well, let's talk a little bit about social mood and socionomics. That's the term that you coined to talk about the study of social mood and how it drives social actions, rather than the way we're conditioned to think of it is that, oh, well, Congress passed a bill, and so now I'm mad and I'm going to vote them out of office. Talk a little bit about what socionomics means. To me, it just seems like it's easier to explain what it is than to accept what it means. So
perhaps. I don't know. Sometimes that's tough, too. People never ask, why did Congress pass the bill?
Right.
They always say, well, if a war happens, well, that would change. I say, well, where's the war come from? And all of these things are social actions that take years and years and years of social thought to develop. And what I think is going on, and why markets are impulsive, financial markets are impulsive, they're not rational, is that people are hurting. Well, where does that come from? It seems to come from a change in mood that we all share in society. And of course, if the wave principle model is correct, the fluctuations occur in a fractal pattern. 5 waves up, 3 waves down, at all degrees of trend. It's all one tapestry that's going on. So what do? We track these only by actions, in this case by buying and selling in the stock market, because that's where we've kept meticulous records for 300 years. People care about money. They don't really care to keep an index of the colors of clothes we wear or the type of music we listen to. But I think those are equally good sociometers, as I call them. So we have these waves of social mood. As social mood gets more positive, people get energized to do certain things. Mm-hmm. They buy stocks. They listen to happier music. They start expanding their businesses. And generally that will show up 3 or 4 months later. That's why the macroeconomy is always lagging the stock market. They will actually, politics gets friendlier. The parties get more middle of the road. They tend to agree more. You find peace treaties breaking out among countries that used to be fighting with each other. Right. When the trend heads in the other direction, people sell their stocks. They decide they want to contract their businesses, or maybe not lend or borrow as much. So business starts to contract a little bit into it. They get angrier with their neighbors. They start protesting. Politics gets polarized. And eventually you have real risks. We see a little bit of that now in these tea parties that people are holding. But eventually I think you'll see separatist movements. The interesting thing now is you've seen just a little bit of this as the states are sort of telling the federal government, we don't care what your drug laws are, we'd like to legalize certain things in this area. And finally Obama had to back down. Now these are things that we hadn't seen for years and years. You're going to see a lot more of that kind of challenging the status quo in the political area, in social relationships, religions. This is going to be an era of more conflict. So just be prepared. Make sure you're not in one of the hot centers of any of this activity. I
wanted to get your reaction to this because a friend of mine wrote this today in a movie review for Cormac McCarthy's The Road, which is, I don't know if you've read the book or have heard of it, but it's a very post-apocalyptic book. There's been some event has happened that we don't know what it is, but everyone seems to be either dead or what few are alive or scrounging around for food. And
like banks.
Absolutely. But she wrote this, and I wanted to get your take on this because I thought it was very appropriate and from a social mood standpoint. Why the sudden spate of cinematic dystopias? Horror flicks are one thing, aimed as they are at teens who scheme a cuddle, but film after film tracing hopeless, bleak, unforgiving post-apocalypse? Is that supposed to be the go-to destination for Saturday night relaxation? And I think you might have an answer for that, actually.
Well, I think that social mood trends predict these things. And as soon as it topped out in 1999, we said, get ready for more horror movies and more negative-themed movies, more anti-heroes. And you're seeing all that kind of thing. There's a TV series on now about a serial killer. He's the good guy. Right. You wouldn't see that in a great bull market near the top. You see it in these transition periods when the bear market mood begins to gain the upper hand. So, yeah, we like to say that we're out ahead of these curves, and if Hollywood and booksellers would sort of get interested in socionomics, they could probably do a lot better on average.
Okay. Bob, thanks so much for your time.
Yeah, it was a pleasure.
Take care. I'm Kevin DeFew, and we'll see you next time at Medieval.com.